Hello viewers, welcome to my channel. I'm Hasham. Already 9 problems have completed on computation of income from house property. In this video, 10th and 11th problem I'm going to cover up. So every problem you are finding a new point. So if you want the perfect knowledge, 100% command on the subject of income tax, watch all the videos. Don't join in between and don't skip in between if you want the complete knowledge. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject income tax for the assessment year 21-22. Take out the videos, see the videos of income from house property. First, to be perfect on the provisions. 4 videos I have prepared on just explaining the theory regarding the provisions of Income Tax Act 1961 for computing income from house property. Be thorough with the provisions, then you start the problems. One by one video, keep a rhythm of watching the consecutive videos. Then only you can get the command. Comparatively, this income from house property is a simple topic compared to income from salary. Income from salary is a vast topic. So many provisions are there. You have to remember. And house property, we don't have so many provisions. Only few provisions. Every problem you can see 90% points are same. Only 1 or 2 points are different problem. For the different points, you have to keep a note of it. Always I suggest you to keep a notebook beside you while watching this video. Note down the points, what I am telling now and then again. That the new points, whatever new points you hear, immediately you should make a note of it. Then only you can be able to remember for a long period of time. Now, before starting this 10th problem, I expect my viewers to have a printout of the problems, which I have given in the link under my description. Take a screenshot of the solution of 10th and 11th problem, then I'll explain all the points in detail. Come on, see the 10th problem. Mr. Vishal Maheshwari owns a house whose municipal value is 1,40,000 MRV. Fair rental value FRV 1,38,000. He let out the house to Srimati Parmeshwari for an annual rent of 1,80,000. 1,80,000 means 15,000 per month. Divide 1,80,000 divided by 12. So per month you get 15,000 into 12, you will get 1,80,000. The tenant could not pay the rent of Feb and so made to vacate the house. Actually, our year ends on 31st March. So before that, in the month of February month rent was not paid by the tenant and she vacated the premises. Unrealized rent for 1 month. February month is not recovered. The house remained vacant for March. So in this problem, there is unrealized rent and also vacancy period. February rent not recovered, March completely vacant. So only 10 months rent is recovered. As per the rental deed, the municipal taxes are to be borne by the tenant. But Srimati Parmeshwari failed to pay, as such the dues were paid by the owner. This is the new point. According to the provisions of Income Tax Act, municipal taxes will be allowed as reduction only if it is paid by the owner. If it is paid by the tenant, it will not be allowed. So Income Tax Act says what is the agreement for municipal taxes? Who has to bear? If in the agreement it is written that municipal taxes will be borne by the tenant, that's all. Now it will not be allowed as reduction even if the tenant fails to pay the amount. In that case, assessee has paid. Then also Income Tax Act says municipal tax is not allowed. Because as per the agreement, it is given that it is to be paid by the tenant. That's all. So here in our problem, the tenant Srimati Parmeshwari has not paid the municipal taxes. Ultimately, Vishal Maheshwari, owner, has to pay the municipal taxes. Income Tax Act says no deduction for municipal taxes. That is a new point. Then municipal taxes are 15%. These municipal taxes are calculated on MRV. Then interest on loan taken amounted 45,000, loan taken for repairs. See here, interest on loan taken will be allowed as a deduction under section 24B, whether the loan is taken for purchasing the house, constructing the house, repairing the house, renovating the house, or reconstruction of the house. So even if the loan is taken for repairing the house and interest is paid, it will be allowed as deduction. That's all. Compute the income from house property for Mr. Vishal Maheshwari. I have explained all the points. Now how it will be presented in the solution? See here. Mr. Vishal Maheshwari, computation of income from house property for the assessment year. Format is not changing. Every problem the same format. Only working notes we have to find out the amounts. The format: GAV, gross annual value, less municipal taxes will get net annual value, less deductions under section 24. 24A, standard deduction. 24B, interest on loan, income from house property. First of all, blank format you should make, and then working notes. In working notes, first of all, we have to calculate adjusted ARV because there is vacancy period. There is unrealized rent and also there is vacancy period. February month rent is not recovered, and March completely premises were vacant. Now, GAV is higher of the following three amounts: MRV 1,40,000, municipal rental value given; FRV 1,38,000 given; ARV. Now, adjusted ARV will calculate. So, actual rental value for 12 months minus unrealized rent minus vacancy period rent. Actually, the tenant has paid the rent up to January. February month, she has not paid the rent and vacated. So 1 month rent. How much is the monthly rent? 15,000. Because 1,80,000 per annum. So 1,80,000 divided by 12, you'll get 15,000. So 15,000 into 12, 1,80,000 minus unrealized rent 1 month. 15,000 into 1, 15,000. 1 month vacancy period. So 15,000 into 1, 15,000. So 1,80,000 minus 15,000 minus 15,000, you will get 1,50,000. So 1,50,000 is the adjusted ARV. So here adjusted ARV. Now if you compare this, the highest value is 1,50,000. In other words, you can do like this also. ERV. ERV is higher of MRV and FRV. MRV, FRV, the higher is ERV, 1,40,000 ERV. But our ARV is 1,50,000. So adjusted ARV is more than ERV. So adjusted ARV is the GAV. So gross annual value is 1,50,000. So we got 1,50,000. Now municipal taxes dash not allowed. Here I have given the explanation. According to agreement, municipal taxes are to be borne by tenant. But as she failed to pay, SSC has paid. Even then, municipal taxes are not allowed as deduction because as per the agreement, the tenant has to be paid. That's it. So no deduction for municipal tax. Then NAV 1,50,000, 30% comes to 45,000. Interest on loan taken to repair the house fully allowed as deduction, 45,000. So 90, 45 plus 45, 90. Deduct 150 minus 90, 60,000 is the income from house property. In working note, you can write down interest paid on loan taken to repair the house is also allowed as deduction. That's it. So I have explained all the points for problem number 10. Now problem number 11. Sri Indra Mohan constructed a house in Delhi in 2009 and transferred the house for a consideration of natural love and affection to his wife. Presently, the house is let out on a monthly rent of 30,000, including 5,000 for services provided for residential purpose. Sri Indra Mohan, he has purchased one house and on account of natural love and affection, he has transferred the house in the name of his wife. That means the consideration for this transfer is natural love and affection. So from social point of view, it is good. There is consideration because husband transferred the property in the name of wife on account of natural love and affection. So consideration is natural love and affection, but that is social consideration. Income Tax Act will not accept this consideration. Income Tax Act says when a husband transfers the property in the name of wife on account of natural love and affection, it is called inadequate consideration. No consideration at all in that case. In reality, legally, wife is the owner. But Income Tax Act says husband, transferor, is the deemed owner. Transferor, husband, has to pay the tax on that property. The property actually is in the name of wife, but husband has to pay the tax because without any consideration, he has transferred the property in the name of wife. The actual rent is 30,000, but 30,000 includes 5,000 rupees for services provided. So we have to segregate. Out of 30,000, 25,000 is the rent of the building. 5,000 is services provided. So for calculating income from house property, we consider 25,000. That 5,000 rupees amount charged for services is taxable under income from other sources. Next, municipal rental value, MRV is 2 lakh. The municipal taxes are 10%. 10% of MRV, 10% of 2 lakh comes to 20,000 municipal taxes. It is agreed that tenant should bear the cost of repair and the owner provided the following facilities. Repair expenditure, it is immaterial whether repairs are paid by owner or the repairs are paid by the tenant. Ignore. For repair charges, it is not allowed as deduction. So simply ignore repair charges made by tenant. And owner provided the following facilities. What are the facilities? Owner has given gardener's salary 12,000 to maintain the lawns and water charges 2,400. See here. The owner is providing from some services to the tenants and he is charging some amount from the tenant. Every month the tenant has to pay 5,000 rupees service charges to the owner. And the owner is spending the money on gardener's salaries 12,000 rupees, water charges 2,400 rupees. So these two are the cost of the facilities given. Cost of the facilities given. So under income from other sources will take amount charged for services 5,000 into 12, 60,000 minus cost of facilities provided. How much are the cost of facilities provided? 12,000 to maintain the lawns and 2,400 for water charges. So 12,000 plus 2,400, 14,400. So 60,000 minus 14,400, the resulting figure is income under other sources. Income from other sources. Now, other expenses incurred by the owner are insurance premium, ignore, not allowed. Collection charges 2,500, ignore, not allowed. Interest on loan for constructing the house 30,000, allowed under section 24B. During the previous year, the house was vacant for 2 months, just like the previous problem. There is no unrealized rent, but there is vacancy period of 2 months. Calculate income from house property. That's it. All the points I have explained. First of all, we draw the format of computation. Here, Sri Indra Mohan. Actually, he is the deemed owner, right? The property is in the name of the wife, but he is liable to pay the tax. Computation of income from house property for the assessment year. Annual value, less municipal taxes, NAV deductions, then income. Now, one by one working note, we'll find out the amounts. First working note, I have given the explanation that the SSC is a deemed owner because he has transferred the property in the name of wife without any consideration. The consideration was natural love and affection, but it is not accepted by income tax rules. Income tax act says there is no consideration. So SSC transferor is the deemed owner. He is liable to pay tax. Second, Amount received for services provided is taxable under income from other sources. Just now I told you. The amount, monthly rent charge 30,000. Amount charged for service provided 5,000. The rent of the building is 25,000. We have segregated. 30,000 is segregated. 25,000 for building, 5,000 for services. Now adjusted ARV, because there is vacancy period of 2 months. So actual rental value for 12 months, 25,000 into 12, 3 lakh, minus vacancy period rent. How many months vacancy period? 2 months. So 25,000 into 2, 50,000. So 3 lakh minus 50,000, 2 lakh 50,000 is the adjusted ARV. Now we compare this adjusted ARV with FRV and MRV. GAV is higher of the following. MRV is 2 lakh, given in the problem, municipal rental value. Fair rental value not given in the problem. Put a dash, FRV. Then adjusted ARV is 2,50,000. Higher of these three is 2,50,000. The gross annual value we got 2,50,000. Municipal taxes are given in the problem 10% of MRV. MRV is 2 lakh. So 2 lakh into 10%, 20,000. 20,000. Deduct 2 lakh, 30,000 NAV. 30% is for standard deduction. 30% of 2 lakh 30,000, 69,000. Interest on loan taken to construct the house, 30,000. Take 69 plus 30, 99,000. Deduct 230 minus 99. 1,31,000 is the income from house property. That's it. The municipal taxes are 10% of MRV, 2 lakh. Here, how it will be taken in income from other sources for services, amount received for services provided. So amount charged for services provided 5,000 per month into 12, 60,000 rupees owner has charged from the tenant as service charges. From that cost of services provided, the services provided are gardener's salary 12,000 and water charges 2,400. 14,400 is the cost of services provided. Deduct 60,000 minus 14,400, 45,600. This is the income from other sources. The income which is charged under income from other sources. That's all. So in this video, I have explained you two problems, that is 10th and 11th. See here, every problem is important because every problem you are coming across one new point. Remaining the procedure is same. So if you want the comment, watch all the problems. We don't know which type of problem will be asked in the examination. So we should be thorough with all the different types of problems. Inshallah, we'll continue the next problem in the next video.